Making sure I had what I thought I had showing. Oh, might help if I know how to log on. I hurt my right hand yesterday morning, and so I'm actually splendid up pretty good and struggling with typing a little bit tonight. I apologize for that. I did find out it is not broken, which is good. I thought it might be. So I don't have to put my name in. That's what I'm doing wrong. Do you ever have days like this? Okay, this is just killing me. Oh, I've got two folks here now. That's good. Okay. I just have to go back into my accounting lab, not going through Blackboard because I can't get to the same items there. But what I wanted to show everyone tonight on how to best prepare for the exam, I'm actually in the Blackboard class for the statewide online content accounting 101 class, and when we're in this and I go to class sessions and go to the review session, it has information set up that will guide you toward your study, but I'm not sure that it's as clear as one might hope that it would be. It clearly lists out all of the objectives that you need to know before you take your exam. You need to be aware of and know and be able to apply these, whether it's in a multiple choice question or in a problem. You would want to read through these objectives carefully. In the online class, not in the face-to-face class, but in the online class, you have a review discussion board of where you need to go out into the discussion board and type in a question that you believe would be a good question to help other students and yourself prepare for the exam. That's part of your grade in this class in the online content. And the other items it tells us is to to go ahead and use these learning activities that are available under the Multimedia Library. Use the study plan. The flashcards are really good to go back and review all of your terminology if you haven't been using the flashcards. I'll also look at the accounting cycle project in the Multimedia Library. That's a very good place to go to and review, to go through and look at all the demo docs and listen to them and make sure that you understand those concepts. Everything to help you tie the whole first 4 chapters together before you sit down to take your exam. All of that will help you to rationalize out the answers on those difficult multiple choice questions. You are given exam 1 review material in this. It's actually just for you to go back to your chapter 1 homework, your chapter 1 test, look at those, then to go to the study plan and see if you can answer the questions in the study plan. Again, it tells you to use the demo docs, the Multimedia Library. Reread the chapters. I doubt that everyone will have time to reread the chapters. I'm not sure that you need to reread the chapters. You may need to reread certain sections of the chapter. If you go to the study plan and you do a test, then you're not very competent in that area, then you might want to look at that. And so this class is set up for you to just look at each chapter's materials. So chapter 1, chapter 2, chapter 3, chapter 4, you are being guided to review your homework, review your quizzes. The quiz questions will be different than the multiple choice ones will be different because they are all pulled from the test bank instead of just part of them. So you may see different questions, but they are all the same concepts that you have been learning. Okay. And as I said, this is the online, and the test points are a little different in it. That's something to just think about and know that those materials are all there. So when we talk about the Multimedia Library, then we are going to want to actually go here to the Multimedia Library. We can select all chapters, or we can select a chapter at a time. I know most of you should be familiar with this, but in case you're not, I'm always amazed when I run across people who I'll say, now how many of you know about the study plan? And then people don't. So it's always good to look at that. Select all. And here's what I'm talking about with the interactive flashcards. If you haven't been using the interactive flashcards, they are a very good tool to help, as I said, learn terminology. The demo docs goes all the way through the basic transactions. They are also in your textbook. So it's something that you can listen to, look at and listen to and see how they move it around, and then apply that to the demo doc that's in your textbook if you learn better by looking at it on paper. Both of those items are really, really good, and I just can't put enough value in using those items to help review. Let me see where the accounting side, and you may want to, I didn't say this either, but you may want to flip through these little videos again, the accounting principles and concepts, accounting equations. They don't take very much time, and they're really quick little reviews that you can do for the important concepts in the classes or in the courses, whatever. The chapters, say the right word. Chapter 2, we have our transaction analysis. This is really good too. It guides you through that. Again, we have our interactive flashcards for this chapter, a few more rules of debit and credit, journalizing transactions videos, very good up to that point, things to use. Chapter 3, I think it's where the accounting cycle I was talking about comes into play. Yeah, I guess not. I don't see it. But again, several videos, another demo doc, more interactive flashcards. All of these are excessively good tools. It's, as much as I tote the study plan and going out and practicing questions, there's more to it than just practicing through questions. Sometimes that can get you in a little bit of trouble because you tend to sort of memorize what the questions are, and then when you get a question worded just a little differently, it makes you answer it incorrectly. So again, you know, it's good practice to see if you can get them right when you read them, but don't try to memorize questions. Okay. And I don't think there's anything special in Chapter 4. What I was looking for doesn't seem to be here any longer. But again, our demo docs with our bank reconciliation, you will have a problem about bank reconciliation. You'll have to complete a bank reconciliation in the problems part of your exam, and you'll have some multiple choice questions about bank reconciliation. So the demo docs for that is a really good tool to use to review as well. Of course, you know, always know I didn't talk about the PowerPoints, but they're always there that you can look at as well. When we go to the study plan, and as I said, I can do some guided things, but there's, you know, more than one way that we can do this. We can look at the study plans and we could do the little quiz me's, right? Do I understand Objective 1.1? If I do the quiz me and I get those all correct, then I probably wouldn't need to spend any time studying that concept because I understand it. And that's one thing that that I like to tell students. Don't get all caught up in studying the things that you know. If you know it, you know it. You can answer it. Study the things that you don't understand. So in this little quiz, if we went through here, and I'm not going to read it, but if I went through and answered my questions, I'm not going to take the time, as I said, oh my gosh, I'm certainly not going to take the time to do this one. But if I go through here and plug in numbers, it's going to tell me that I don't know anything. This could take a really long time, couldn't it? Which financial statement covers a period of time? The financial statement that covers a period of time is A and C. If you recall, the balance sheet is a snapshot in time. So once I would submit that quiz, then it's going to tell me, oh my gosh, you know, what you need to do in the study plan for this is, or I have not mastered these, so I need to go back in and work those problems. I have never really worked through the study plan doing all the quiz me's, so I don't know. It would just take a lot of time, but I don't know if that's your best effort way to do it, or if the best way is to just click on the view all chapters. For me, I think this is very guided and works. And when I send out to some of you may have a list of objectives to study, or if in the online class you pull those objectives off of Blackboard that you need to study, then we can do that very guided study. If I get, and I know that I need to know how to construct financial statements and their relationships, I can look here and I can see, well, look, there's no quiz or QC questions under this, so this one is most likely going to be an exercise or a short. There's no problems on the exam problems. They're all either exercises or short exercises. So you could do the E's and the S's, or look at the E's and the S's for each objective, do a couple of them, and you should be well prepared when you do that. If I look at a different objective here, so here's just some quiz and QC questions under Objective 1.3, applying the accounting equation. And so, again, those are good questions to go in and practice at least all of the Q's and all of the QC's. But it should be, as I said, not trying to memorize them, because memorization will get you in trouble, and it won't be the exact questions. You could get some that are the same, but they're, you know, it's not going to be across the board that you get questions out of here. They'll be very similar questions. So you want to make sure you understand the concept of why you're answering the question instead of memorizing it. So again, you know, that's where I would point you to go toward the study plan and use it in this manner. So you'll want to make sure you do that. Let me see. And then the other thing, I'll pop back up if I can find it here, my spreadsheet that we use to review. and use that as a talking point for some review again. I know some of the things we want to think about and be able to answer questions about are things out of Chapter 1. You are asked about what are the financial statements. You're going to be asked about the conceptual foundations of accounting. You know, what is accounting's objective, the main objective of accounting, or the primary objective of accounting. So the little chart on page 7 in your textbook is really a good place to go and study and review and make sure you understand the concepts. Again, you know, I'm always amazed when I'm in the classroom and I'm doing a review for something like this first test, and I'm talking about the whole accounting cycle, and I still see, you know, the deer in the headlight looks on the faces as the terminology is still just rolling over everybody's, not everybody, but a lot of people's heads. And I do my little informal surveys of who feels really confident about what they've learned so far and who feels really like it's really bad, and it's pretty spread across the board. I don't have anybody ever that says they feel extremely confident moving into the test, but that's okay. And it's also okay if you don't ace the test. You know, life goes on. There's a lot of points in the class. You need to do your best, but if you don't ace it, that's okay too. Lots of times being timed worries students. I was looking at the amount of time that it takes, or the suggested times, and because, you know, as instructors, when we go out and we set up these tests, we are following the guidelines of the time. It says the average time it takes students to complete these. So it might say that a student would normally be able to complete the entire quiz in 17 minutes, and we give you a half an hour or something along that line. It's always more time than what the average time is. So I have students argue that it must be awfully good students that are taking them, that are completing them that fast, but it is pulled over all over the country from students who are using the same material and what their average time is. So you may feel like there's not enough time, and I hope you don't feel that way. That's something that sometimes I share, and maybe I'll go ahead and share that here about how much time each quiz question or problem says it'll take, and then that helps you not to panic. Maybe if the second problem is supposed to take you 20 minutes, then maybe when you're working on it for 20 minutes, you're not, or even 30 minutes because you've got more time built in, maybe you don't have that heart attack, and that helps you to do a better job with the exam. So at any rate, go through each objective and look at all of the quiz questions. So if I'm going to go down here to objective 4, I'll have some more. Lots of quiz questions here. A few exercise and shorts. So if you're doing this and you want to do QCs, E's, if you've got enough time, do the QCs, E's, and Q's, and you should be in good shape. And also go back and review your actual homework problems, because we do try to make sure that the problems that we put on the exam match up with what you have seen before. Doesn't always happen, but we do try to make sure that they match up so that you're not looking at an entirely new problem that you've never seen anything like it. Okay, see if I can get myself unsidetracked. And I'm looking for a file. It'll take me just a sec here. Might take me longer than I thought. Alrighty. So this isn't new. I've used this before in the webinar, but it's nice to pull back to and talk about as we're going to review for the first 4 chapters of the exam. So the main thing that we want to know is we want to know the rules of accounting. We want to know the accounting equation. We want to know how to apply the accounting equation. We want to know that if we have assets of $100,000 and liabilities of $60,000, that our stockholders' equity has to be $40,000. We want to understand that that accounting equation has to always be in balance. We want to know that debits have to equal credits in every single transaction. We want to know that to be in good form, debits go first. We need to know that normal balance, the terminology of normal balance means the increase side. Therefore, the normal balance of assets is debit. The normal balance of liabilities is a credit. The normal balance of common stock would be a credit, as would the normal balance of retained earnings, also a credit. And then we would have a debit for dividends and expenses as their normal balance. And revenues would have a normal balance of a credit because that's the side they increase on. Why is this important? Well, if I get a problem and it tells me these are selected accounts pulled from a company, or the account balance is pulled from a company and all balances are normal, create a trial balance. So I have to know if I have supplies expense, that's a debit balance, so I can put it on the debit in the debit column of the trial balance. And I have to know if I have service revenue, that's a credit, so that I put it in the credit column, so that in the end I can add up my debits and credits and make sure they equal. I also need to make sure that I know the order that I would put those items in on the trial balance, which would basically be, and I have a trial balance down here. Let me move it. If I'm doing this trial balance, if these are my accounts, if I have cash, accounts receivable, supplies, computer, accounts payable, unearned revenue, if these are my actual accounts and I'm going to do a trial balance, I'm going to list those accounts in a chart of account order, which would be my most liquid assets of cash, accounts receivable, supplies, computer, and then my most liquid liabilities, accounts payable, my unearned revenue, and then the next items are my stockholders' equity account of common stock, dividends, retained earnings. If I have retained earnings, this is an interesting trial balance. The reason I didn't have retained earnings on this trial balance that I'm showing you here on the screen, right here, the reason retained earnings aren't there is when I worked through this problem, I came up with, it was a new startup company. So when this company was started, it had 0 retained earnings. And so then I had to add my net income in, less my dividends, to get my ending retained earnings. But this is the trial balance. This is what I was talking about here. Let me see if I can. And where these numbers come from are from the ledger, which the T accounts represent the ledger. I need to know that. I need to know that my book of original entry is the general journal. That's where I have the chronological order of my transactions. I need to know what a transaction is, going all the way to the basics, and a transaction is actually the economic event has occurred within the business. If you remember the one little problem that we had about you went to a restaurant to get a meal, when did the revenue get recorded? And this was the revenue recognition principle. Well, if we're accrual basis, we recognize the revenue when it's earned. So that's not when we order the meal. It's when the restaurant serves us the meal. That's when the restaurant would record the revenue based on accrual basis. If they were cash basis, they would record it when we paid for the meal. Now, of course, that's all in one day in a restaurant business, but it still lets you see a little bit of how the difference would be of what reflects as a transaction, an economic event. And just an order is not an economic event. So to go back to Chapter 1, page 7, if we look at the the foundations of accounting. We have some qualitative characteristics, and those are relevance and faithful representation. We need to include items that are relevant, that would make a difference to the decision maker, and we need to be aware of what materiality means, and what materiality means is that it would make a difference. If I make a 30-cent mistake in a $100,000 company, that probably wouldn't deter anyone from investing in my business or from loaning me money. But if I made a $30,000 mistake in a $100,000 business, then that would certainly be material, because that would change the decisions of the decision makers, such as the lenders and the investors. Faithful representation, we have to make sure that we are presenting the facts as they really are, not creating things that are not true within the business, and present that in an honest and forthright manner. Comparability, we want to make sure that our financial statements are prepared in such a way that we can compare them not only to ourselves, year to year, month to month, whatever period we are, but also to other similar companies to see if our company is doing as good a work as the next company might be. Verifiability, we need to be able to verify. And how do we verify? This is something that I was discussing in class that I found it interesting, because I said, you know, when we were doing the transactions just here in class and doing them up on the board, where do these numbers come from? I mean, I kind of like just pull them out of my head, right? Or the book just gives them to you. If you're in my accounting lab doing your homework, it just gives you the numbers and you plug them in. You don't necessarily think a lot about what makes it verifiable. I guess it makes it verifiable because you're reading the number. It tells you to use that number. But where in a business, you know, you don't have a textbook telling you in a business where to get those numbers. So those numbers actually come from source documents such as invoices, right? Bills, if someone sends us a bill, or if we invoice someone else, or we get a purchase order, a bill of sale maybe if we purchase a piece of equipment. And all of those items are source documents, and they're verifiable because we can go trace them back to that source document, and maybe the check that we wrote for it or the check that we received for it. All of those documents are matched up, and that makes that item verifiable. Timeliness, we need to report information quickly enough that the decision makers can use it. It doesn't do you a lot of good to get 2013's financial statement finished at the end of 2014 because another whole year has gone by. Understandability, of course, understandability means that the report is transparent enough that people who have taken the time to get a basic understanding of accounting can understand those financial statements. It doesn't mean that every Tom, Dick, and Harry that's out there running on the roads should be able to stop and understand a financial statement if you pulled it out in front of their face. Okay. And of course, there's always constraints. Cost is a constraint. We might have the best idea of something that could improve our business or some system that we could put in place to improve our business, but if the cost is prohibitive, then there's no reason to do that because the benefit has to outweigh the cost. And I don't know if we ever talked about that in that much detail, but it just helps you to understand some of the type of questions you could be asked about some of those concepts there. Of course, the entity assumption is that every business is separate. If you should keep your personal business separate from what you're calling your business, even if you're a sole proprietorship, you should keep 2 separate checking accounts, run all your ledgers separately. Continuity, or the going concern, we assume that a business is going to keep going year after year after year. Historical costs, we want to record all assets at what they actually cost us. That is part of the verifiability. It traces back to the verifiability standard. And the stable monetary unit, if you popped up a question on that, then that is the that money is reported without the assumption that it's changing value every second of the day. We can't complete we can't keep going back and restating our financial statements just because the exchange rate is changing frequently. We just report it at the dollar. Of course, you need to know the definitions of assets, liabilities, owner's equity. You want to make sure you know those, and be able to distinguish between those. You want to be able to know what type of accounts are assets. You want to know your cash, your accounts receivable, your prepaid expenses, whether it's insurance or rent. Your supplies are prepaid expense. And you want to know all of your long-term assets, such as equipment, buildings, land, are assets as well. You want to understand paid in capital, which is the price that you pay above the par value of stock. I don't really think that's on there, but it is one of the accounts that is defined in Chapter 1, so you want to make sure you know that. You need the definition of revenues, expenses, and dividends. You need to know what each financial statement calculates. The net income statement shows you your revenues minus expenses for net income. Your statement of retained earnings, you are starting with your beginning retained earnings plus your revenues minus your expenses, or your net income as net minus any dividends paid out. And that gives you your ending retained earnings, which you need for this placement on your balance sheet to make your balance sheet balance. You might also be asked a question about which financial statement is a snapshot in time or a period in time, and that would be your balance sheet. The balance sheet is a snapshot or a specific point in time. It would be dated like December 31st or January 31st, whereas all of the other financial statements, the income statement, statement of retained earnings, and the cash flows are all dated for a period of time. So they might be for the year ended December 31st or for the month ended January 31st. And so again, for the period instead of specific date. You do, I'm pretty sure, I know at least in the face-to-face classes, you will be constructing the financial statements a little bit in your problem part of the test. So mark you some places in your book that you can go back and reference some financial statements quickly if you need to. Hopefully you don't need to, but if you do need to, you want to be able to find them. Okay. Chapter 2, that's where we progressed into our transactions, and the analysis of the transactions, where we talked about I purchased supplies for cash. What two accounts would I use? If I purchased supplies for cash, I would use cash and supplies. If those were $100, I would have $100 more in supplies and $100 less cash. If I purchased those same supplies on account, I would have $100 in supplies under my assets, and I would have $100 credit to increase my liabilities for my accounts payable. That's using my rules of accounting, helping me to determine whether it's an increase and decrease. So again, titles I want to review. There are many, many account titles starting on page 55 in your textbook. Many, many different asset accounts listed. You've got a few liabilities. It talks about accrued liabilities, which are your unearned, unearned are a deferral, but accrued liabilities are like your payroll that's accrued. And then your stockholders' equity account, it names several stockholders' equity accounts and defines them again. So that was introduced in Chapter 1, and then it is reviewed in Chapter 2. Lots of transactions are analyzed. Starting on page 58 in your textbook, I would definitely recommend that you review each of these transactions so you're familiar with them. And at this point, we were not doing journal entries. We were looking at how does it affect the accounting equation? Does it increase or decrease the accounting equation? And the book walks you through several transactions. You can just review the transactions pretty quickly. Good place to start and look at to be ready to take the test. The mid-chapter summary problems and the end-chapter summary problems are nice places to go and look at and see if you understand the whole entire concept. If you can just go to the mid-summary, for instance, on page 66, and if you can look at that and you say, yep, I can do that, then you've got the first half of that chapter. So again, don't spend a lot of time worrying about that. Say, look at it quickly and say, I can duplicate that if I need to. I understand what they're doing here. If I open a problem, I'm not going to panic because I can make that happen. Then second half of chapter 2, we actually start talking about doing the actual transaction, and that's where the T account was introduced. And remember, the T account represents the ledger. That's where we keep track of the increases and decreases in each account. So we would have a ledger account for cash, a ledger account for accounts receivable, a ledger account for supplies, a ledger account for accounts payable. And we are tracking each of these supplies to keep track or to get the balance in that account in order to be ready to prepare our trial balance and our financial statements. On the top of page 69, you see a chart similar to my chart here at the top of my spreadsheet that you've got up in front of your face. They just are using arrows, and I just put the pluses and minuses instead of using the arrows. But it helps you to see the rules of accounting and learn the rules of accounting. The expanded rules of accounting then are on page 71. You know me, I always suggest that you have the rules of accounting beside you when you sit down to do your accounting homework in case you need to do a journal entry, so you're ready to answer those questions and do what you need to do and apply those rules. Much more important to be able to apply them. Again, this chapter walks you through transaction after transaction after transaction. It's duplicating the transactions it did in the first part, only showing you the actual transaction. So it's duplication, duplication, duplication. But again, if you can flip through this and say, yep, I can handle that, I can do that, then you're in good shape. Create your trial balance. You probably are going to be asked some questions about, can I determine the cash balance or the amount of my cash payments if I know what my beginning balance in cash is and what my cash receipts are, and I know my ending balance? Can I determine how much cash I pay out? And we're just going to be solving for X. Those analyzing accounts start on page 79. Do a little review of that because you will be asked about that as well, either in a multiple choice, most likely in a multiple choice format, I should say. Okay. And I do know you need, you need to have an understanding of a chart of accounts just so you can understand what order that you might want to put your financial statements in. And then, of course, the in-chapter summary problem starting on page 84 is a complete transaction analysis. That is what I did here in this spreadsheet when I just used different numbers, but it's the same concept of where I had a transaction, I made the transaction, I posted a transaction to the ledger, and then I completed the financial statements doing that. Okay. Chapter 3, we move on into adjusting entries, and that's where we need to start talking about deferrals and accruals. A deferral is something that is already on the books, but we need to change it. We have postponed, not change it, we need to update it at the end of the month before we prepare the financial statements to make sure we are reflecting the revenues and expenses correctly on the financial statements. And to do that, we want to look at items that we have postponed recording as an expense and items that we have postponed recording as revenues. Those are items such as prepaid expenses and supplies for the asset side, and then unearned revenues for the liability side. Those are standard deferrals. I started with $100 worth of office supplies. I bought another $100 that left me with $200, but when I went to the supply cabinet and counted it, I had $50 left. Therefore, I had $150 that I needed to do as supplies expense, and that would have left me a balance of $50 in my supplies, and I would now have a balance of $150 in supplies expense because I used those up during the period. That's an example of a deferral. Again, a lot of this falls back to the revenue recognition principle. We talk about that a little bit, about the time period concepts. Review all of the major terminology, review it, know what chapter you can flip to pretty quickly if you need to look that up. Familiarize yourself with the chapters. That's the best thing that I can tell you, because you won't have time to look up everything. You don't have time to read 4 chapters while you're taking the test. You need to be familiar enough you can flip to it if you need to find something. So let's see. The revenue recognition, we record revenue when earned, not when cash is collected. Expense, we record expenses when incurred, not when cash passes hands. Okay, so talked a little bit about adjusting entries. Again, the adjusting entries are demonstrated starting on page 121. Look through those adjusting entries. If you have any questions before you get ready to take the test, as you're going through this again and you're studying and you are looking in and there's something you just flat out don't understand, make sure you send me an email. I'll do my best to answer and clarify that before you click into your exam and can't do anything else about it. But it's just the examples are there. You won't have adjusting entries that you have not seen examples of at all. Accrued expenses, of course, such as your salary. Sometimes that trips people up because of the days, the way that they report the days. But you need to determine what day was the last day of the month, and then you want to make sure that you record into an expense and increase your expenses on the debit side and your payables on the credit side for that amount that was earned in the month that is closing out and won't be paid till the following month. Okay. And then you do more financial statements. And then the second half of Chapter 3 is actually doing the closing entries, which, I always think aren't too difficult because you've got 3 standard closing entries. We want to close out all of our temporary accounts. Our temporary accounts are the red accounts, revenue, expenses, and dividends. So we zero those accounts out and move their balances into retained earnings to update the retained earnings account. So that's what the closing process is. You have 3 entries. Close your revenues, debit with a debit, retained earnings is a credit because you're increasing your retained earnings. Expenses are a credit because you need to zero those out, and you debit your retained earnings because expenses do reduce your retained earnings. And dividends also reduce your retained earnings. And how does this work? I mean, as we think about it, I hope you can apply the rules of accounting with this, but I tell you to zero out a dividend, you need to credit it. That's because if my dividend has a balance of, I think I've got those in here. So my dividends would have had a normal balance of $100. My closing entry is a credit, and that makes my balance 0. And dividends reduce retained earnings. Retained earnings has a normal balance of a credit. And so you see here where I'm reducing that by that $100 in this little example here. So the closing entries, pretty standard. You should be able to do those pretty quickly. So here's my closing entries for this problem. I close my service revenue, my expenses, and my dividends. They're just entries. They then have to be posted to the ledger, and we do a final trial balance. This chapter also introduced the classifications of accounts and their liabilities based on their liquidities. This is where it tells you the order that you put your assets in. You want to make sure you put your current assets first, your long-term assets, your current liabilities, and your long-term liabilities. This would be preparing your financial statements in good form. You will hear me say in class on and on again that you put your accounts in the chart of accounts order. So when I build a chart of accounts for my company, I make sure that I have it listed in the order of liquidity and the order that I want it to pull to my financial statements. I do that by a numbering system to make sure that I have the accounts numbered in the order they need to appear on the financials. So we are shown on page 144, classified balance sheet of where we have our current assets separate from our long-term assets. And we also had some property, plant, and equipment. And then we actually had some intangible assets. We had goodwill, which is an intangible asset. And we also had our liability split into current and long-term. And we split, I guess we didn't split, we just listed all of our shareholders' equity together. In this case, we will get to a point further in the book where we actually split out our stockholders' equity section into paid-in capital versus retained earnings. And then on the financial statement, we have a multiple-step financial statement showing here. If you're told to prepare a single-step income statement, you would list all of the revenues and then all of the expenses. When we're asked to prepare a multiple-step financial statement, we list our revenues less our cost of goods sold or our cost of sales in this example to get our gross profit first. And then we list our expenses. In this case, we listed our store operating expenses and then our general and administrative expenses separately. And it just breaks down. We have more line item totals in this. So again, take a quick look at page 144 to see an example of a classified balance sheet and a multiple step income statement. You may need to work a couple of little ratios such as net working capital, current ratio, and the debt ratio. Those ratios are shown on pages 145 through 146. Review those, and then it shows a few little transactions. Okay. And then we move on to Chapter 4. In Chapter 4, most people thought Chapter 4 was a little easier because it is what we call the cash chapter, and most people know how to handle cash and deal with cash on a daily basis, so they can figure that out a little better sometimes. So the main thing that you're going to need to take forward from Chapter 4 for the exam is you're going to need to know you're going to want to know a little bit about what fraud is, right? You want to be able to identify fraud. There's a difference in a fraud and a mistake. You also want to know some of the controls that you would want to have in place. Maybe you want, maybe it's good to discuss what kind of what are the three items that are in the fraud triangle? You have to have the motive, the rationalization, and the opportunity in order to do that. And then how can we stop people who do have the motive, the rationalization, and the opportunity? Well, we try to shut them down by doing safeguarding our assets. We want to make sure people follow company policies. Policies aren't there just because somebody likes to write policies. They're there to be followed and to protect the company. We want to make sure we have legal requirements met, such as the SEC and the IRS. We want to make sure we're paying our taxes like we're supposed to as we talk about tax season. We know that Sarbanes-Oxley or the SOX Act, we should know that that puts some additional safeguards for company into place. And that now there are stiff penalties up to 25 years in prison for securities fraud and 20 years for an executive making a false sworn statement. So if I am someone who is in control of the money in some way, shape, or form, then I may go to prison if I make a false statement about that money. So with internal control, it all relates to the control environment. You need to do a risk assessment and have good information systems in place. You need control procedures, and then you need to monitor those controls. It doesn't do a whole lot of good, and for this is something that we see at Ivy Tech, right? We talk about the keypads on the lab doors being security. And so that safeguards the computers in the classroom because we've got the keypad on the door. But how many of you have been in the hallways waiting and another instructor comes along because your instructor isn't up there yet and they punch in the door and let you go on in? And that's really nice because it lets you get in, lets you get settled down, lets you get logged into the computers. But we have just shot down the safeguard of having that keypad by having students in the classroom without an instructor. And it's just interesting at how quickly the features that you put into place to protect your company can be overridden. But I think that's just a good example of how we do that. It's something that's helpful, but shoots down the control. We always want to make sure we have separation of duty. That's really difficult when we have a small one-person office. It's not difficult. It's impossible if we have a small one-person office to have separation of duties. So they have to, that person is going to have to do everything if they can't handle all of the account features. We talked about in class a little bit that things that you could do is try to have the receptionist maybe open the mail as it comes in and log any money that might come in. You could have the receptionist do the bank reconciliation as well to make sure they are that the person who is writing the checks isn't the only person seeing that. Okay. We go into then the design and use of the bank reconciliation. We did a lot of talking about how checks aren't really used as much. A lot of people never write a check anymore, but it's important to know the features of a check. You should know where to find the routing number. You should know where to find the account number, the check number, and everything on the check, and how to write a check properly. Hopefully your bank has signature cards in place with the photo ID so they can identify if they need to identify someone. In the bank reconciliation, and you will be doing a bank reconciliation on the test, you need to know how to identify what are your outstanding deposits, what are your outstanding checks. If there's an error, to determine if it's the bank's error or your error as the bookkeeper, and how to fix that error. And then you also need to know how to do the journal entries at the end of the process of completing the bank statement. And those would be anything that were adjustments to the book side we would need to do an entry for. Yep, there's a very good example in your book starting on page, starts on page 206, and it shows you the bank statement and your book ledger, and you go through and you can see how the example follows through as they do the bank reconciliation in the bank and the book side. We do talk about online banking and how that you can use this history to match up into your bank statement, but as we talked in class, a lot of people don't even do a bank statement. They just completely, or a bank check register. They're not recording what they are writing checks for. They just rely totally online statements, and that's not a great plan. So again, there's a mid-summary problem, which is a bank reconciliation exercise that you can work through. So that's just good practice to see if you can do it, because you can look at the problem on page 213. Don't look at the solution, just look at the problem, try to work the problem, and then finish your adjusting entries. And then we talk a lot about controlling cash. How do you control it? And that's having different people open the mail. You want to make sure you match up your purchasing goods with your received goods. So your purchase order, your receiving report, and your invoice should all be matched before you pay for the item. And the last thing we talked about in Chapter 4, and I found out that that was a little confusing to some people, was the cash budget, how to construct and use the cash budget. And I tried to take it down to something pretty basic and see if that would help. And it's just you know how much cash you started with. You can determine, or you can project how much cash you think you're going to bring in from your customers for the month. You can project how much cash you think is going to go out for the month, and you can have you have a required minimum balance. So maybe your required minimum balance in your bank is $5,000, and so if I'm going to end up with just $4,000, I'm going to have to come up with that $1,000 somewhere. So I have to plan to borrow that money. I don't want to wait till the 31st of the month and all of a sudden I'm $1,000 short. If I project that I'm going to be short, I want to have a loan already set up that I can just sign, or if I'm a business, I probably want a line of credit of where on a month that I need to pull a little bit of money, I can pull it, and on a month that I'm excessive, I can move it back in and maybe earn a little extra money on it. I'm going to want to pull money in and out of my regular checking account to have my money make money as much as possible. And that's the whole thought process behind a cash budget. For the business. It's just a planning tool so that I know that if I need to, I'm not taken by surprise if I'm going to be $10,000 short this month. I mean, I probably can't go to the bank on the morning of the 31st and walk out the door with a note for $10,000 if I haven't pre-arranged to have that money borrowed. You used to be able to do that, but those days are kind of few and far between in today's world. It takes longer. Oh, it has to be approved by the board or something. So that's basically the first 4 chapters. Do you have any questions? If you have questions, there's a, you should have a, I say that. It seems like you can chat in this. I don't know why. You couldn't use the chat, but you can just ask a question in the chat. Maybe I have the questions turned off. No. Maybe the program is smarter than me. Are you still there, Karen? I'll open up your mic, so don't say anything bad about me because I opened your mic.
Okay. I'm here. I was chatting, though. I don't know why you can't see it, though.
Okay. Well, yeah. Okay. I don't know what's going on. I usually have a question field, but my chat, I'm not seeing anything. Did you post it to the entire audience? And say,
yeah. Do you underneath where it says names alphabetically, there's a little, there should be a chat box underneath it. Maybe you've got it just minimized.
Oh, I can see my chat box, but I'm not seeing your chat, so that's interesting. That's okay. That's okay. Did you have any questions? You're the only one that's on here.
No, this has really helped tremendously.
You think? I feel like I just was rambling. But anyway.
Oh, no. I took a bunch of notes.
Okay.
So.
And I'll send you a, oh, let me go ahead and stop my recording.